Hi, good morning, friends. I have a company today with an overview for Zaggle Prepaid Ocean Services. Sorry, excuse me. This company has been doing well. They've managed to have a good revenue growth of about 10% quarter to quarter. However, the company has a lot of additional expenses with regards to generating more revenue, attracting more clients, and having some incentive for its employees as well. So the you can see the 34 crore in increase in revenue from quarter to quarter. Uh, the overall net profit still stands between quarter to quarter of 20 crores. So as I explained, the details are due to the higher expenses made by the company on getting more customers. At the same time, also making additional expenses on its employees and some benefits for their employees. Plus, the third is the schemes that the company operates and the kind of wealth generation or revenue generation that it provides, and the uh, the program that it runs for its clients. It does pay back some cashback kind of promotions like we get on our credit cards. So those are the kind of schemes that the company runs. So generating additional revenue also involves some basic costs. So the company sentiment hasn't gone down well with the market because the company has a higher than normal expenditure, which is the reason why the company has taken a big hit on its share price. The company had rallied to about, uh, you can say, a high of 582 in the month of December, and within a couple of months, the stock has corrected almost 60%. So we'll look into some more details. Before we get there, let me share some information. So it has got a new contract from Indus Towers yesterday. The share has corrected 3.5% yesterday before this news came in, and overall 33% loss in the last one due to the Q3 FY25 results and the normal then higher expenditure, which led to a negative sentiment in the market. So some information is available here. It has won a couple of awards last year. Shared this information on Facebook so that you all could read through if required. High operating expenses. So the key concern is why is the stock price falling? So falling primarily due to rapidly rising operating costs and employee expenses. Despite the company reporting strong revenue and profit growth, its recent quarter has been dampened. Investor sentiment through the company is seeing positive top-line numbers. Essentially, the market is worried about the company's profitability due to the high expenditure on expansion and workforce growth. So key points about the price decline: high operating costs, low circuit hit, and market perception. So basically, because of the high rising expenditure and the net profit remaining more or less the same, the market is worried about the net profitability of the company reducing further, which could actually lead to a further correction and a further drop in the price. So it becomes important that one, the company tries to reduce its expenses, and the aggressive nature of trying to gain more market share and try to market its products to more companies. It is possibly spending more money on marketing and sales. So that is something that the company will need to cut back or have a plan in place to uh, have a steady kind of revenue growth with sort of a maintained or capped expenditure as well. So once the overall net profit starts growing, even if it is by 5% over quarter on quarter, because it's getting regular business from customers, it will be able to build the value addition again. So I will take you through this. Okay, maybe you'll be able to see it better. Yeah, see, there you go. So you can see gross profit margin has grown, though it's less than the Q3 of 424 result that was about a year ago. See, these figures are in millions, so if you divide 86.8 million by 10, you will get about 8.6 or 8.7 crores. So if you compare the last quarter of FY24 or the Q3 of FY24, you have about 8.7 crores as expenditure on employee benefits, and uh, Q3 FY25, which was the last quarter ending October December, the expenses has gone up to 14.5 crores. So it's a huge jump of nearly 6 crores. So incentive and cashback is something that is related to the revenue generation schemes that the company operates for its customers. So basically, the customers use Zaggle's customized software programs, uh, which is able to use the basic database and the structure of the program so that they can manage their cashback benefits and some other agreements that they have with the software provider. So, if you want to gain more knowledge of it, you can download the financial profit and loss statement of this company. However, you can, go through the internet to gain some knowledge. I've prepared some write-up. You can read through my write-up before you do some further research. You'll be able to get more information. So, other expenses also you can see from 14.6 crores, it's gone up to 22 crores. So, all the three assets, the expenses have grown. So, the increment in revenue made over the quarter has been offset by the higher than normal 15-16 crores of additional expenses that the companies made during that same quarter. So we'll move on. This was just something that I wanted to show you all. One second. Okay, okay, this is I think this is better. Yeah. So this is again the revenue from operations. This is quarter and last month the comparison. So this is Q3 FY24 119 crores, and then Q3 FY25 33 crores, or rather 336 crores, and there was about 200 crores 199 crores. So the difference you can see, there is growth, revenue growth. However, overall you can see the expenses being high, which is the reason why the market is not reacting positively to it. So these are some figures. Maybe if you want, you can go through them later. This is the key performance indicator for the company. Customer base has grown. If you divide 283 crores to 333 crores, almost an increment of 17%, nearly 50 customers higher, or you can say 500 customers higher in terms of numbers. So this is not in terms of value. This I think is in terms of numbers. Yeah, this is numbers. Is not rupees, or is not any financial metrics. Yeah, you can see the breakdown of revenue. So the company has program fees that they offer. Just a second. Okay, so the company has program fees that it charges for their software, and there is software fees maybe for customized software that a company may require based on their own requirements. So These are the two revenue streams for the company. This we've already gone through. Company has raised a sum of 5,950, so 59 crores, sorry, 595 crores raised through QIP. Management is thankful to all the investors showing confidence in the company's growth story. The proceeds from the QIP will be used for future inorganic expansion, repayment of debt, and general corporate purpose. So these are the list of customers that the major customers that Zaggle has. Mastercard is recommended. Zaggle SAS platform payment and card products. So it is like a payment gateway also for some of its companies. So it collects revenue for some of its customers. So we'll go through some more information later. HDFC cards bundled with Zaggle software to offer its corporate customers across industries. So HDFC uses its services as well since December, I believe. Then moving on, Mastercard, Zaggle. Okay, then it has Zaggle for Strata as well. So SAS platform payment and card products to corporate customers of Strata. Uh, Fleet program for AGP City Gas. So it has also some software customized programs for petroleum companies as well. So you can see Mahindra First Choice Wheels, Zaggle Rewards platform it uses for its customers. Then you have Blink Commerce Blinkit using the Zoya solution. You have then uh, Can Fan Homes Limited, Zoggle Zoya. So Canara Bank Finance also uses this for its customers. So it's like an employee expense management and benefit proposition. So Canara Finance Home is using that for its employees. Yeah, so specific program designed for use of employees. So Zaggle will provide Big Basket with Zaggle's safe expense management platform. So again, Big Basket is also using Zaggle's program. So these are different companies listed on your left. Then you have Hitachi as well, Metro, Mumbai One. You can see this is the spend management of the company, corporate spends, see vendor payments, analysis, business expenses, fleet management, international payments. So it does allow international payments to be made through its programs or through its software or through its payment gateway. Reimbursement. So you have employee benefit expenses and reimbursement. So possibly something like software used to track certain expenses and allow the systems to collate the data, and then maybe on a quarterly or a monthly basis the reimbursement can be done through the system. Channel partner sales commission, so sales of different various channels. So there is GDPR compliance, multilingual interface. Okay, moving on. This is the different partners, merchants, and corporates. So basically, it's a complete life cycle with a strong network that it offers to business partners, employees, and all of the merchants. Sorry. So this is omni-channel offerings, offering a combination of payment instructions, mobile application, and API integrations. So it's co-branded products with the bank, and these are the ones that it offers its customers through the rewards scheme, cashback rewards scheme. So multiple banks and network partners dashboard to manage reporting and analytics. So these are the different products that the company offers. So international payments gateway, then Zaggle fleet management, Zaggle fleet management, Zaggle ZX empowers business with full control over spends through dashboards and corporates. So basically, customized software for reporting purposes to manage how the business transacts and how they are making their payments. Zaggle Zoya and embedded finance integrated data-driven business spend management platform. So again, something related to finance and managing the expenses the company makes. Then Zaggle Save expense for employees, employee benefits, reimbursements, and tax benefits. Expense management in Zaggle Propel, rewards and recognition, channel rewards and incentives, employee rewards and recognition. So different products for different kind of companies, and whatever the product that suits its clientele, they will be able to base their business on that. So this is one lead management, leaderboards and achievements. So this is like a reporting structure software. It has certain key parameters for the company that it offers the software for. So you can go through more details. So this is Cycle Save. Then okay, so basically this is overall Zaggle in a nutshell. Seasoned team, multi-product strategy, technology and network, large addressable market, robust financial matrix. So something that if you want more detailed look, you can go through this or their website. So here again we are. Okay, so this is the share price of yesterday. Then overall last 5 days it is up 0.5%. Last 1 month 30%. Last 6 months down 6.5%. So if you look at the overall 6 monthly performance, the company is down almost 7%. If you look at the entire year, it is down 37%. So it's a big value erosion because of its current poor performance, uh, based on the expenses that it is making. So this is something that will need to be uh, checked again, or something that you need to keep a track of. So once the Q4 FY25 results are declared, maybe end of April, first week of May, if the expenses are not in order and the business is growing, expenses are growing, then at the end of the day it won't be able to generate any value for its investors. So then you will see that the share price will take a further hit. Whatever positive sentiments that come into the market, it doesn't seem that it will drive too much of growth between now and maybe May, maybe around the first week of May. There would be some progress, but it really won't make too much a difference unless the overall net profitability of the company improves. So the company will need to be taking some drastic steps to keep a capped expenditure budget so that they do not exceed the expenses unnecessarily. So you can see that the companies gathered money through QIP to increase its business, and which is the reason why the overall uh, expenses is taken a hit, and overall it will be something that would be affecting the entire year's results also, because the money that is being spent, it cannot be offset for marketing in just one quarter. It has to be done maybe over a period of 1 or 2 years. So the amount that it spends now, it has to generate at least 3 to 4 times more business of that. So you're looking at maybe, so company has about 336 crore uh, revenue generated this month, this quarter rather, last quarter rather, then it has to target at least a revenue of 400 crores. Once is able to do that and consistently stay at that put, you will see the price adding value again. So this is the overall uh, sequence, I believe, since 2023. I think the company was listed sometime in 2023, and you can see since then it has added 185. Probably it was listed around 160 rupees per share, and within a year it had gained a lot of momentum. But this last quarter has made it to drastically drop. So something for people who believe in the overall management of the company and the possibility of its growth. It is also a good time to look to invest in the company. So this is symbol for the company, market cap. You can see cash, debt, then promoter shareholding 40%, sales growth, return of capital employed. So profit has grown, no doubt, but at the end of the day, expenses have also grown in line with that. So this is the price chart. You can see 582 on December 16th. You see a stock PE of 203 as of 4th of March. So which means that the price of the stock was very high. The stock PE has actually reduced because of a reduction of price and improvement in the overall earnings of the company over the period of last 8-9 months. However, the steep correction now has made it more vulnerable to further corrections in the near quarter. So this is the price compared to the other companies in the market. You can see uh, some of the companies doing well. You can see one Mobiquick Systems 311 rupees, Infi Beam 20 rupees, 97 Communications 769. So 197 Communications I think is Paytm, PB Fintech follows Pesa Bazaar 1561. So again, you can compare with other companies, though price valuation seems to be good. Let us look at the stock PE and market capitalization also. So price to book 3.77. MOS utility has the highest price to book value of 8.2, which is very expensive, I believe. RN5 is 6.62. Infibeam is 1.69. So something for the other companies to look at. Paytm again 3.87, so that doesn't show very good as well. So we'll have to look at all the financial performance of these companies for the last maybe 1 or 2 years before we look at investing or comparing this with the Zaggle. Here EPS, you can see the highest earnings per share is for Zaggle, and all the others are not able to perform in any range in any way compared to Zaggle. So there is a good growth opportunity for the company. There is a good chance of good rally again. However, expenses need to be controlled. You can see some companies may have good return on capital employed as well. However, they have a high expensive stock PE and probably not sufficient growth to back its financials. So this is sales growth chart, and then this is profit growth chart, return on equity, return on capital. This is like amazing 0.13. This is even better because the company is having revenue uh, from its partners, so it has a surplus cash flow. This is a very good matrix. The interest coverage ratio is 5.34, which is also very good. Shareholding pattern. So again, we have good substantial investments from the DIIs and FIIs. However, the public holding is still pretty high. So the higher the public holding, the bigger the chance of price volatility and sentiment of the market. So that is the reason why you see uh, the stock may drastically rise and may also drastically correct based on the sentiments of the market, because nearly 40% of the holding is by the public, and it can create negative sentiments very quickly and impact the business in a quick way. So company significantly reduced its debt, so that is good. Revenue has been good for the past 3 years. The biggest concern here again has a company has a negative cash flow of 0.8, 0.7, 82.75. So what does that mean? So here we'll go through that negative cash flow part. Let us look. The company has an efficient cash conversion cycle. So again, it has money that it comes in from its partners, which is a surplus that they are always holding. So they are always in a negative, which is a very good positive sign for the company. So yeah, so let us look at the limitation part of the negative cash flow. So negative cash flow from operation means that the business is spending more money than it's earning from its regular activities. This can happen when a company is starting up, investing in growth, or experiencing operational inefficiencies. So this negative cash flow is more to do with investing in growth activities. I do not believe that the company has any uh, experiencing operational inefficiencies. However, the major concern is investing in growth, which is causing the cash flows to be erratic. So, company may be spending more on investments than its earnings from operations. So, this is the biggest cause here, and it will need to correct and stop this somewhere. Sorry. So that will enable the company to start generating value again for its investors. Company may be struggling to generate enough cash. Uh, Possibly, maybe some part of it comparing the amount of business that it has, uh, it should be able to generate more cash from its operations. So a combination of both could be the reason why the company has a negative cash flow. So I thought maybe this is something that is better explaining with a meaning, because some of you may be able to understand it, some may not. So again, some importance that you all can go through. Solutions have been given. So review outgoing and reduce expenses. So that is the first major concern that I've been highlighting over this video. So backup cash is required. They've managed to generate QIP cash, however, that again dilutes the value of the company overall. So something that the company needs to focus on. Anyway, this is again just quarter results for you to look. You see the average profit has just grown by 1.5 even after such a high good revenue growth. So net sales year on year you compare, there has been an improvement overall. However, this will nullify as soon as a quarterly result is declared. If the net profit increases on a quarterly basis, you will see a momentum of the price going upward again. This is something that you all need to keep in mind. Overall borrowings have increased, but this is as of FY24. It's not an updated balance sheet, so it's based on the last quarter of FY24 for the financial year which ended for FY24. So we'll have to see the next bit. Overall, you can see the borrowings have decreased, and more or less net capital assets blocked are 22 crores. So intangible work in process is nearly 50 crores. So total reserves have gone up, which is a great positive for the company. Maybe that is the reason why the company did well during the first 2 quarters, or maybe the first 2 quarters of FY25, and because expenses have increased, the has been a correction in the price. Anyway, I think this is more or less all. This is just the last bit of information. Ashish Kacholia, holding value 100 crores, so nearly 2% of the share. I think this is a public investor, so something that you all need to just keep in mind. So these are the promoters, 44% investment, so between the two of them. So just an FYI for you all. So thank you for watching. Please like, share, and comment if you wish to improve on the content shared. Thank you.